Man, oh man, 20 years ago today, I was covering that for Fox News at the time, and the criticism that was roundly heard for Alan Greenspan is that he was poo-pooing what was a great economic nirvana, that we were on the verge of what would become an internet boom that eventually went bust. Real estate was the big thing. You could sort of leverage off your home and get a home equity loan on a home equity loan on a home equity loan. Was he simply way ahead of that, or what? The read now from the NASDAQ CEO, Bob Greifeld. Good to have you, Bob. Happy 20th anniversary of that.
Yes.
You know, when we look back at that, I do remember covering the criticism he got for missing the internet boom that would really take off almost right afterwards.
Right.
And then the real estate boom that was ensuing beneath. Both would collapse. So was he simply ahead of the curve or warning about another bubble?
Well, I think you could argue it both ways, because she certainly was early predicting the dot-com bubble. But think about what happened after the bubble, right? When you think about the economy today, the 5 largest market capitalization stocks on the U.S. are on NASDAQ, and they are internet-based companies. So it all depends upon your time frame. So he was too early, then he was prescient, and then maybe he was off the mark because the internet,
irony being the internet boom
changed everything.
And it's still seen today.
It's still seen today.
Do you ever worry, though, when he talked in that same article and elsewhere about the concern that we're building up another one, I believe talking about bonds and interest rates, what have you, that there's only so much the government can and probably should do?
Well, I would say this. With the election of Donald Trump as president, I think you're going to see greater economic growth. You're going to see more inflationary pressures. And as a result, you'll see bond prices will move and yields will go higher. But it's different than the internet stock bubble in that we're coming from such a depressed rate, right? It is not the natural order of things to operate in a near zero interest rate environment. So I think you'll see us get back to normal here in the U.S. I think Europe will be years behind us.
But a little bump in rates is one thing. A
Right.
big bump is another. And I know so many young people, you probably bump into themselves, who say, oh, my gosh, I missed the boat, and now my mortgage is going to be 4%. You and I can remember when they were a little higher.
Yeah.
So, but everything is what you got used to. And for a lot of people, they don't remember a lot of that. And it's going to be tough.
I would say that a 4% mortgage is something, if you look at historical norms, would be on the lower end of the scale. So we have to get to that normalcy. I think our hope and our plan would be we do that in a measured and incremental way.
What do you make of how the markets have responded since Trump's election?
I think the markets have a lot of wisdom to them. You know, certainly the theory was if President Trump was elected that the markets would go down. That was the initial reaction. Right. But it didn't take the markets long to recognize that he would be a pro-business president.
But what happened election night? Because they went from a panic freefall to then just stabilizing quickly.
It stabilized and went up. Because I think the markets are efficient, there are wisdom in the crowds, and they say, wait a minute here, take away all the other discussions, all the other issues. We've just elected a president who will be pro-business. He'll come out with a...
Do you think he will be pro-business?
Oh, definitely.
What about these threats of tariffs on companies that want to leave?
Well, I think in the process of getting to the right outcome, you have to take different leverage points. I'm sure that's part of the plan.
You don't think he means the tariff stuff, but it's...
I don't want to speak for them. I don't want to speak for the president-elect, but I certainly believe that there will be a method to the madness in terms of getting us to more balanced trade relationships with the rest of the world.
Do you ever worry, I know markets can get ahead of themselves and just as much as they can fall behind the curve, but that you buy on the rumor and the prospect of a president-elect Trump, you sell once he's president?
Well, I don't want to speak to that, but certainly the reality of governing will be difficult, and certainly he will have probably...
He's got a run of the table, right? He's got the House and the Senate. He can get almost anything he wants done.
Well, you know, there's a lot of granularity within the definitions of the party, so I could see he have common cause with Democrats on a number of these different initiatives, especially with respect to trade. But certainly the reality of governing will be there. There will be difficulties of getting there. But the fact is, if you have a clear mission and a clear focus, you know, I'm quite optimistic.
Do you worry that the market, whatever he can do to spark the economy, you know, this has been a nice bull market, and I guess to your point at the outset, a lot of it propelled by Federal Reserves and 0% interest rates. that will be taken away, and then it's a matter of momentum. Can you maintain that? This is a bull market. There's a lot of people it's long in the tooth. What do you say?
Well, I would say this. I get the great opportunity as CEO of NASDAQ to spend a lot of time with the leading technology companies here in the U.S. and really on a global basis. And the level of innovation that's coming is quite impressive. I think it's also important to recognize where I think President-elect Trump can be positive for technology companies, which has not been the case in the market so far, is on the topic of H-1B visas.
Right.
So certainly when you have a demand for these highly educated people, I think the President-elect has said that if we need them, we'll bring them in. So if that happens, I think that will be very important. So what you have in the Valley and other technology havens is the opposite of what you think about in the rest of the country, is that you do not have enough people to fill the jobs that are available. So certainly if the President-elect addresses that issue and addresses that early, I think that will be very positive. The other part is when you see the trapped overseas cash, the largest owners of those cash are, in fact, the technology companies. So to the extent that policies are positive for technology companies and you have this great innovation culture, I think this will have a very positive impact in terms of the economy and help us get to that 3 or 4% growth rate.
If I can indulge you, go over your market and business expertise to maybe foreign policy and
Right.
the way Donald Trump accepted a phone call from the leader of Taiwan. She called him. He didn't call her, but it reignited concerns. Oh, he's going to be a bull in a china shop. Hasn't hurt him. He got elected president acting and being that way. But when it comes to relations with our foreign friends and foes, too much of a loose cannon? What do you think?
I would say this. Always look for the method in the madness. And from my personal opinion, if I am the President of the United States of America, I don't know why I would feel encumbered from taking a phone call from anybody on the planet, right? So it's a phone call from anybody on the planet. I think it's a good move.
But he's going to start from a view, this might be decades-long U.S. policy, but it's not decades-long policy for me, right?
Exactly.
Does that worry you on any level?
Not at all.
Okay.
I think to take an inbound phone call is not a rash action, and to the extent I think the Washington Post is reporting it was planned out, I can understand why that would happen.
Yeah. Finally, on the markets themselves, one of the things that Alan Greenspan ended with, and as you outlined, not that there's little the government can do, but there's little the government really should do. Whatever problems arise from a bubble bursting, and I'm oversimplifying and paraphrasing here, deal with them as they come up. But nothing grand, nothing big, nothing that will compound whatever's going on. What do you think of that?
I think that philosophy is good. I call it run to problems, right? So I, as a CEO of a public company, have been trained to run to problems. But the fact is you have to, in a certain way, let the bubble, the problem develop, and you don't want to run to false bubbles because you understand when you get involved, right? And I think Alan speaks to that, there could be negative consequences to it. So you actually have to let it run its course, identify it clearly as a bubble or a problem, then it's your job at that point and not before that to take responsibility and to take action.
Yeah, you can't slow down something or readjust it for fear of other problems cropping up.
Exactly. You have to believe in the markets and believe sometimes there's market failures and respond to the failure when it's clearly a failure.
All right, Robert, thank you very, very much. How those 20 years flew, right?
It did fly.
And you were in a different business 20 years ago.
Well, I was in the technology business, but it was different than the exchange.
Perfect background for what you're doing right now. Robert Greifeld, the big cheese at NASDAQ.